Okay, welcome to our 5 o'clock session. This is a full hour panel discussion on why do payment industry organizations continue to experience challenges with remote authentication. For attendees in the room and remotely, again, you're tired of me saying this, please add the session to your app and ask questions through the app. I am now pleased to turn things over to Stacy Schatzoff, who's going to moderate this panel. So Stacy, why don't you introduce yourself and the panelists and take it from here.
Thank you, and thanks for having us. I'm excited to be here. We recognize that we are standing between you and a party, so we will keep that in mind. But thanks again for having me. So with me, I have Arman Aijen of EMV Co., Kim Sutherland from LexisNexis, and Deepti Karup from M&T Bank. So I will let them introduce themselves and just tell you a little bit about their background and what they do before we get started. Arman, I'll start with you just because you're right next to me.
So my name is Arman Aijen. I'm the Director of Technology at EMV Co. And for those who have not heard of EMV Co, basically we are defining the specifications for the chips that you have on your payment cards. And you may ask, why does it matter, the work that we do? And there are three components to it. And the first one is basically having something familiar and convenient that you can use. So whichever card you have, they will all look the same and behave the same way. And then we have the compliance program to make sure that wherever you go, you know you can rely on your card and it's going to work through the compliance that we do and the testings that we do. And then the third aspect is obviously we can't do this alone, and the industry relation and the inputs that we get from our associates or the different industry partners that we have, like the FIDO Alliance, allows us to actually have this usable globally.
I'm Kim Sutherland. I lead fraud and identity strategy at LexisNexis Risk Solutions. I'm based in Alpharetta, Georgia, which is a suburb of Atlanta. And LexisNexis focuses on helping businesses and government agencies make better risk decisions. So that means everything from credit risk decisions, fraud decisions, financial crime compliance, being in alignment with AML and KYC type of requirements, all the way to collections decisions. I focus only on consumers, really. I don't, because there's also business fraud. But I focus on consumer fraud specifically, and my team looks at everything from new account opening all the way to ending a relationship with the customer.
Hello, everyone. My name is Deepti Karup. I'm the SVP of Product for Customer Identity and Access Management at M&T Bank. I've been in the IAM space for about 18 years now. And in my current role, I'm responsible for the vision, strategy, and roadmap for all customer identity and access management capabilities at the bank, including but not limited to authentication, entitlements, ID validation, and several other identity solutions. I also partner closely with my fraud counterparts to make sure that our strategies between fraud and identity are tightly coupled with a vision to secure our customers and the bank by making sure we have updated authentication mechanisms and also keeping into account the fact that we don't want to add friction to the customer experience and at the same time abiding by the industry standards and regulatory compliance. So thank you for having me here.
Thank you for being here. And I'm Stacy Schatzoff. I'm part of the Federal Reserve Financial Services. I live in Charlotte, but actually am part of Fed Boston. And I'm part of a small team called Payments Improvement. And what we do is we essentially work with the industry to help secure the safety of the US payment system. So really working with different folks in the industry to understand what challenges they're facing from a fraud and security perspective, and along with those challenges, how we might help them overcome some of those challenges. So this is probably no surprise to the folks in the room, but the top two challenges that we hear are scams and authentication. So obviously we're here to talk about authentication today, but the topic comes up quite often, so excited to be here. So the authentication landscape obviously is evolving fairly quickly. We've heard a lot of sessions today talking about, where we have been and where we're going. And as it evolves, the fraud evolves as well. So as the payment landscape is advancing, it offers faster and more convenient payment methods, but that also allows the fraud tactics to get more sophisticated. Authentication has long been a tool to help mitigate payments fraud, but in recent years has had some challenges as the tactics have shifted, some of those being with scams, of course. Today we'll talk about the evolution of payments and authentication and the impact that this has had on fraud mitigation. We'll also spend some time discussing what others are seeing across the globe and how we might be able to learn from that here in the US. So why don't we go ahead and get started? And Arman, I will start with you just because of your location next to me, but please, jump in. And if others have questions, please feel free to jump in as well. But before we dive into authentication, I think it's important to level set on the evolution of payments. So can you talk a little bit about where we were 20 years ago versus where we are today?
I might even start a little bit further than 20 years and
Sure.
remember when, the very first chip card started in the late 90s. And before that, we had the PAN that's written on your card and the MAC stripe, right? So two were having the same number being written on them, which made it quite easy to do the skimming of the card and replication of this. Now, the chip card came about in order to prevent this. So you use a cryptogram and you have some dynamic linking that is, and the signature that comes on top of it in order to prevent this kind of skimming frauds to happen. And at the very early stages, those experiments were done in various regions with various banks, and they didn't necessarily work together. This is how EMVCo got created in order to define a single technology specification that was made available royalty-free. And that's what kind of accelerated the adoption of the chip cards. And in the US, we saw the migration to chip card happen, and now we see those numbers approaching 90%, close to 100%, in terms of the number of transactions that are using chip cards. So we have kind of improved significantly the security behind the face-to-face payment transactions, especially with COVID and people staying home, and the remote fraud has been growing, and this is what we have been seeing quite a lot, and has been part of a lot of the conversations that we have been seeing. The main difference between remote commerce and the face-to-face is the amount of information that you collect. You've got your physical card, you've got something that the PIN that you type in, and then you have all this interaction. So you not only will trust the merchant because you know that merchant and you're in the store and you can validate, and then the communication that you have between the chip on the card and the terminal is kind of verifying the legitimacy of the transaction. When you're remote, you don't have all those signals that tells you, okay, I'm in a trusted environment. So how do you create that? And this is what we have been working on quite a lot. I don't know if we will see the animation or not, but we are looking at all the different use cases that happens behind a consumer and his payments, and also what are the technologies that needed to be developed in order to enable those use cases. So we started using EMV payment tokenization, so replacing the PAN, which is if you steal someone's card number, then you can replicate that relatively easily to make online transactions. The payment tokenization allows to reduce the impact of that stolen number and reduces the impact significantly. On top of that, we'll come into the remote authentication. We developed 3D Secure, which allowed to get a second factor, a strong customer authentication in order to validate that the cardholder is really who he claims to be. And this has been defined as an acceptable solution for PSD2. In the previous presentation, it was mentioned. The strong customer authentication regulation requirement in Europe. And there's different ways where that can happen. If I go back to the example earlier about data, we did a lot of work in improving that authentication mechanism by adding a lot of data elements. So the merchant knows a lot about how you're behaving and what you're buying. And then the issuer knows a lot about you as a cardholder. But the exchange of the information between the two is crucial in providing the card issuer the confidence on the legitimacy of the transaction and reduce the fraud. And then if the data provided is enough, then we can enable the merchant to have a frictionless flow where you don't see the second step authentication, which can be perceived as friction, happen. So that's on the authentication side. And then in order to provide more convenience and let's say, for the consumers' ease of using the cards online, there's a secure remote commerce technology that is provided. And via Click to Pay, with only one credential, you can have the list of all your cards. And Joyce, that was talking about the UX and accessibility, was also mentioning that there's a huge benefit on an accessibility side of having that convenience of making the payment through a single transaction. So this is something that we heard also yesterday around, sometimes it looks easy, but the complexity behind it is huge in order to orchestrate multiple payment systems working together. So these are the three main blocks that we use in order to give more confidence and trust, reduce the fraud, as well as improving the conversion rates and the card development for remote transactions. So we've gone a long way in payment.
Yes, we definitely have come a long way. So Kim, how would you say the industry has been forced to adapt to the evolution of the payments industry when detecting and mitigating fraud?
So I think there's a big difference globally. So a lot of the things that you talked about that were happening in Europe, they're not happening in the US. So we never were chip and pin, right? We were chip and signature, and then just became chip. And so there's really no association of actually that in-person card with the individual at all. As long as you have the card, it's good enough. So I kind of think of the payments industry very similar to the authentication industry. The password has been put to death 1 million times. We've had about 32,000 funerals for the password. We have had that many funerals for paper checks. Guess what the biggest form of fraud happening right now is? Check fraud. Okay, I don't want y'all to be ashamed, but just raise your hand if you have written a check in the last 12 months. Anybody. That number is going to keep rising. Why is that rising? Because fraud is happening with card not present fraud, which means that the rates to use your credit card keep increasing, and small businesses are like, I'm not going to take your credit card unless you pay that fee. So it's this vicious cycle when it comes to those kind of things. So in terms of like the types of evolution of payments, scams is huge. And the other challenge that we have is that payments get faster. So as payments get faster, we have more and more challenges with trying to authenticate all aspects of the transaction. And it's not just the person that is making the payment, it's also who the payment is being made to. So now that we have peer-to-peer payments in the midst of all of this as well, I just wish we just had a credit card to deal with, right? So we have checks, we have credit cards, we have peer-to-peer payments, all this mess happening at the same time. And we don't know, okay, raise your hand again, if you've ever sent $1 on Cash App, Venmo, any of those types of systems because you're not sure that you're really sending it to the right person. I know, me too. Yeah. But it's all of those things are just ridiculous, right? So that's our payments world. And we keep acting like it's so sophisticated. And we keep making it even faster and faster and more remote and remote. But we can't even get the basics fixed. So that's my view of payments.
You're right about check fraud. So we just came out with an article about check fraud about 2 weeks ago. And we were all joking that we can't believe we're still writing about check fraud, but here we are. So.
I cannot, so from a LexisNexis standpoint, we deal with payments fraud, payments efficiency, payments screening. We spend all this time with these very advanced capabilities, and I sit in a room with a customer, and they're like, check fraud's my biggest problem.
Yep.
And we're like, we have
I
no
can
solution
attest to
for
that.
you.
Totally attest to that. And it is funny because, we think about technology and what we can do and how faster we can do, and we can cache this and cache that, but no, you can't cache that. Like, that is the biggest problem right now.
It's
I
crazy.
totally agree with you. Yeah.
And I will tell you, I also had to pay the credit card fee this morning when I bought a cup of coffee because they didn't want to cover it for me. So I was very upset about that, but I don't have cash.
So
they
that's
didn't
not
take Venmo. I was not happy.
That's not supposed to happen. So in my spare time, I've become a secret shopper. It's so much fun. But I do all of these audits on companies because you're not supposed to do that to us. And every company is still trying to sneak that in. You pay cash, you get one price. You pay with your card, it's a higher price. That's not supposed to happen.
Yeah, I agree, but I wanted my coffee and I had no cash. They wouldn't take Venmo or Zelle, so there I was, paying 3.37% extra. So Deepti, authentication is obviously an important part of the flow when we're looking to validate who's accessing an account. Can you talk a little bit about what authentication is and why it's so important?
Sure, like we are literally at Authenticate 2023, so I guess I'm gonna preach to the choir here. But in its basic, like the most fundamental portion of authentication, or what authentication is, if we talk about that, essentially it is me validating the identity of a user or a system as they are trying to access some kind of a resource. So basically going back to validating whether the system or the entity is who they claim to be, and why it becomes crucial if you really look at the core or the foundation of authentication. I guess we can talk about security as number one reason why authentication is important. Access to sensitive information when someone is logging into an account, or can we prevent access to unauthorized access, I should say, to sensitive information, thereby protecting our customers and institutes. Like, I'm going to speak for the bank because I'm from the bank. So our customers and the bank also from unauthorized access. The second comes privacy. We have access to sensitive information like financial data, your personal information. How are we protecting users' privacy? I would also say that trust is another big factor. Our customers really trust us with their financial data, with their information, and their assets. So authentication is one mechanism that we use to make sure that we establish that trust with our customers, and also maintain that trust as we interact with them more often. And the biggest fourth, again, as a financial institute, I would say we are mandated to comply with regulations, industry standards, regulatory compliance standards that are basically applicable to all financial institutes. So it basically comes down to how are we using authentication to take care of these four core pillars. And you would see multiple mechanisms like username, password, PIN, biometric, name it. But why are we doing all this? And in the core, the fundamental reason why we do this, we are trying to take a multi-layered approach to how we authenticate the user so we can keep all of this more secure, and we can protect them, and we can protect the financial institutes, and at the same time comply with the regulatory requirements that are enforced on us.
So Arman, what are some common authentication practices that are being used today?
So to look at some of the additional comments that were made, in the technology that we make available has to work with the different use cases for the industry. So we develop the technology and the specification and make them available, but we get a lot of feedback, and we can update it and improve it in order to be able to address those needs. So the possibility of using a PIN is there, but it's not, like, we don't do mandates, and we don't do or influence the business models and everything. So the technology is there, and it's up to the choice of the people to whether they want to use it or not. When they see that the cost of the fraud is too high, maybe they will revert to having or using some of the additional layers of security that is available on top. But that's a business decision that. But what
and
we
in-person
need.
fraud is low. I mean, so the card-present fraud is very, very low. So I understand.
And then behind that, then we have all these different technologies that we have to make available depending on the feedback that we receive. And that can become very complicated. That is like more than 250 different fields in the authentication. And the merchants come to us and they say, hey, which ones should I use? Well, it depends. Are you in which industry you are? And then we collect so the gaming industry gave us some feedback and say, oh, we would actually quite value having these fields added. So we add them into it. For the travel agencies, IATA came to us and they said, well, for travel, we would need these fields in order to have more confidence in the transaction. We added those as well. So we're putting together this paper that says why these functionalities have been added, because it's one thing reading the specification and see field A, B, C, D, but there's another to understand the history.
Right.
I was in Nashville last week. You can ask me why you're talking about that. It's like there's a lot of live music, and you can go to Broadway and all these bars and everything, but we ended up in the Songwriters Cafe, and found it was the best experience ever, because not only you hearing these people singing, but they're telling you the story of how they came up with the song. And I thought that additional layer in front of it was actually make it a lot better, and you actually enjoy the song a lot better.
Right. Very true.
Yeah, so to go back to that story, we have these different functionalities made available, but we can't do them on our own. And as part of the industry collaboration, we decided to join forces with the FIDO Alliance and W3C. So we created this Web Payment Security Interest Group, and we've been focusing on how the different technologies can work together. So there's been updates on all three sides on how the technologies were being developed, so that people don't have to add additional layers of complexity on top of it, but they could natively work together. And through the authentication method that we have, you can actually use a FIDO authenticator in order to validate the person. And that brings a lot of convenience, because then suddenly you just need to look at your phone in order to get the authentication done. And the winner is the cardholder and the consumer at the end of the day. So these kind of interactions and how we enable those functionalities are really, really crucial. The other one that we focus on right now is all the discussions related to the privacy and the security. So how do we find the right balance between those? As we remove the fingerprinting of the devices on the browser side, so we have challenges in recognizing the cardholder when he comes the second time. And it was very insightful all these 2 days to see all these new technologies being made in order to address a little bit the same problems that we're having. It's like, how do I know he is who he is? What kind of signals can I get in order to have the confidence around it? And if someone comes to me and says, hey, I'm doing this right, trust me. I don't know, it might be because of where I'm from, but I'm just like, okay, no, I need to go and have a look why I should trust you. But yeah, what kind of signals, what kind of information can you provide in order for the other party to have sufficient confidence and allow the transaction to happen and reduce that fraud?
It's because you need to see the data to trust them, right? Not just because they tell you to.
Mm.
Yeah. I think one of the things Armand said about it's a business decision. There's a lot more to that, which kind of you covered too. Like end of the day, the cardholder or the customer is the winner here, right? So I guess a lot of it depends on what kind of demographics we are talking about when it comes to implementing any solution when it, in that space. So I'm sure everyone has seen different demographic of customers, and one solution may be great for like tech-savvy users, but then the same is not, so great for, say, for example, elderly customers. Yeah.
And that creates a lot of complexity, because then you have to address all of them, and then suddenly your simple specification becomes multiple pages long.
While you have to comply with all the regulations, by the way.
I mean, that's one of the inputs that we have. Like updates are happening because we want to enable use cases. So for the functionality, We have updates that happen for security reasons, like there's a new threat happening, we need to update in order to address that. Regulatory requirements, so these are all the things that have a strong influence on making that technology usable and available for everyone. Yeah.
But consumer choice has to be included in the process, right?
Absolutely.
Because without that, you're going to see the best authentication method with very little adoption, possibly. And so you have to be able to have enough options to be able to address your full customer base.
Seems like we've done it right with the chip card.
For in person.
I need to talk to your customers, Armand, for that.
That's right.
Just kidding.
That's right. So how have authentication practices and effectiveness been impacted by the evolution of fraud that we've seen?
So you talked about scams earlier. There's always new challenges. I know in the previous session, they started talking about friendly fraud. And I think that's another real challenge, right? When you actually have someone in your household, and of course someone in your household would never be one to steal your device or to be able to get access somehow. But we make things so that things are easy, right? You allow other people to know your passwords, or to be able to you enroll their biometric on your device as well, and those kind of scenarios for one-time use, but it opens up the Pandora's box and all these things. So fraud scenarios are real. The concerns around first-party fraud has grown since the pandemic started. There's a lot more real individual making fraudulent acts. And then third-party fraud has always been there. So it's a combination of human-initiated fraud and bot attacks now that companies are having to deal with in the payment space and any other aspect of regular consumer transactions. So I just think in general, payments are not immune from these same types of fraud activities.
No, I know scams, of course, keeps coming up. We're doing a lot of work there, but there's always that challenge, right, when it's the authorized party sending the transaction. That's certainly evolving and becoming more of a problem. So, always, like I said, an interesting topic that keeps coming up when we're having conversations with people as well.
And we try to separate also just general social engineering from other types of scam activities, because when you think about just social engineering in general, people are being tricked, but right. There's a lot of scenarios where you think that you're doing the right thing, and it just becomes even more challenging. So there's the whole space of that's why I guess there's so much attention right now on consumer education, which has been a thing that no one wanted to deal with.
Right.
But now you have to deal with consumer education. Yep. So you're getting emails and things on television and social media trying to educate everybody in this time.
Yep. And there's an aspect of consumer education, not only from the aspect of like, hey, this is what's happening in the fraud world these days, but also as you implement solutions to mitigate fraud, there's a next level education that you change the authentication mechanism or the customer's journey, for example, to mitigate some of the fraud. You have to have a customer education campaign for that too. Hey, your experience is going to change, and this is why your experience is going to change. Some people like it, most people don't like it because they're used to having that same, I want to log into my bank account exactly the same way I did yesterday. So I think that customer education or consumer education is multi-layered as we look at fraud and authentication through the same lens.
Absolutely.
Yeah, no, that's a good point. And I know that came up earlier where, if you're changing your authentication method, you have to let the customer know that you're doing that. Because if they're not planning on that, right, then they may think that it's not legitimate or that something else is going on.
Yep.
So Kim, adding friction is something that we talk about, and of course is always a balance, right, between security and customer experience. So can you talk a little bit about the benefits of friction from an authentication perspective and how that might impact a customer, both positive and negatively, right? Because I think sometimes there's that false sense of security where a customer may see friction added and automatically think that everything is secure when maybe that's not the case.
Yeah, so I think this is a great leap from customer education to the concept of just consent in general. And friction is one of those things that definitely can harm a consumer. It can harm a business transaction. People abandon processes when there's too much friction. But also, when there's not enough friction, people get really nervous about the process too. So passive forms of authentication, the consumer often doesn't understand, and then they feel like there's no friction there at all, or there's no authentication happening. So that becomes a customer education scenario. And then the active forms, sometimes they can go overboard, or it's security theater, like you said.
Right.
So it's always kind of an important balance. We always think of it in terms of risk to friction. So when the risk is high, I think that it's logical for a consumer to have more acceptance of having more friction. But if I am a repeat customer doing the same thing from the same area, you know me, why am I experiencing this, repeated friction? So I think that, it's an expectation that if I'm on a new device, at a new site, making a transaction much higher than expected, those kind of scenarios, if I wouldn't get friction, that would be a bad thing, actually. Or being, even when payments are denied the first time because it's so out of character, a lot of times consumers actually appreciate that process. They don't get upset. Sometimes they might get embarrassed if they're standing in the store. But in terms of just understanding that my account is being protected, that's actually something I think that most consumers can understand and appreciate overall.
No, absolutely. I know I get a little, surprised when I'm expecting something to be denied or, held up and it's not. And I'm like, well, wait a minute. Like, why isn't this being held up? Like, it really should be. So I think there's both sides of that too.
Absolutely.
There's a lot happening in the background that the consumers really don't know about in terms of how, the transactions are being monitored and checked. But then also there's this perception of security that is given to the cardholders, giving them the choice on certain functionalities that are anyway taken care of, but making them visible, give them that perception of security on top of it. That can also help. But one of the points I thought was very crucial when we look at the global scale, the different attitude of different regions to friction. So the challenge. And I'm glad to hear from you that this is happening here as well, because there are certain regions, they would not do the transaction if they don't get the challenge, because they feel confident or more secure in the transaction if they get the challenge. Like in places like Switzerland or Japan, it's like it works very much like that. So there's like the regulated space versus unregulated space. I think that's what we were talking about at the beginning. But then there is the trusted and untrusted world, and how people actually have that perception of trust, and how can we actually give them that perception of trust. And the difference between the amounts and the risk. And we see that also in the contactless transactions, where you do a low value, you don't need the PIN, but then if you do a high value, it's asking you for it. So there's not always a PIN.
But and trust is both ways though, right? Trust on the consumer side, or trust from the business side, is trying to make sure that I can trust the consumer.
Yes.
But consumers also have challenges with trying to know if they're giving the payment to the right business as well, and if they're going to, misuse their payment instrument later on.
Mm-hmm. And that's why when you have solutions like the tokenized version, where you give your credentials to the merchants, you know that they will not be able to reuse it elsewhere. So it's like this kind of, so people will rather use, and if they recognize, like with a click to pay, the secure remote commerce, they recognize the image of the card when they click on it. So that visual recognition, oh, this looks exactly the same as my card, gives them more confidence in doing that transaction, and the conversion becomes higher behind it. So it's interesting to see all these different behaviors of people, and then having the tools to implement one or the other. And sometimes a lot of authentication happens in the background based on the information that's being collected, as you were mentioning. Is it within your habits or not? And you can do risk-based approach. You can do whitelisting of merchants. Like if you don't automatically, so you can automatically add the merchant because you're always buying there, but you also can give the consumer the choice of saying, yeah, this is one merchant that I trust. So your airline, for example, I don't want to do it. So.
Yeah. And I think there's also this aspect of, I think what you said, Kim, that trust has to be established on both sides. Like customer needs to trust the institute. We as institutes have more tools available. We are doing behavior analytics. We are collecting data. We know what you have done in the past. As a customer, they don't have the same level of access to, or time for that matter, to see, whether they can trust or not. So there's always a human element to all of this. Like how much are we thinking about what this means from a customer's, lens?
And like, again, different regions, different behavior. In Switzerland, you get the notification in your banking app when you make the transaction. So just that transparency, whenever your card is being used, and you can authorize it directly from the app. That's one of the functionalities that is available. Yeah.
Right.
Yeah, no, absolutely. So Deepti, I know there's a lot of work being done to provide a unified customer experience, right? It obviously offers a lot of benefits, one being that the customer knows what to expect no matter what they're doing within the platform. So can you talk a little bit about what you're seeing and the additional benefits that has?
Sure. I think across the industry, there's a lot of focus on providing like a unified experience for the customer, and it all ties back to, and since I'm going to talk more about authentication and identity, it ties back to the concept of single identity of a user or a customer. What it is called is, the industry term for that is identity orchestration or identity as a service. And why it is important, like if I understand the relationship of a customer with the bank, there are so many things I can see as a benefit for actually understanding who this customer is, what their behavior has been like. And in terms of providing an experience for them where I know what their past behavior has been, I have the data, no matter which channel they come in through and interact with the institute, I know what their behavior has been. I can use that data for cross-channel or multi-channel authentication implementations. I can also look at it as a cost benefit when it comes to things like I don't have 15 different systems in which I'm maintaining the identity of the user. If I have single identity of the user, the calls to for reset password or account unlock, things like that would reduce because I am maintaining that single credential and single identity of the user, and so my operational cost is reduced. I can also use that information to work with my customer journey UX UI folks to see when the customer interacts with the bank, can I provide a unified platform for the customer to come and log in, they go to the branch, they have similar experiences, because we do understand what their relationship has been with the bank. It also, when it comes to complying with regulations, I don't have to have 15 different ways of complying because I have such fragmented identity of the user. I'm doing different things across channels, across lines of business. So I can have a single approach to how I comply with different regulatory requirements as well. So there are tons of benefit when it comes to, and at the end of the day, what is important is it also aligns with our users' requirement almost now to have that seamless interface to their digital experience.
Because consumers don't necessarily even separate virtual experiences from physical experiences. Yeah. So if they are in branch or in store, or if they're in the call center, or on the website, or in a mobile app, all of that needs to be the same, and it's so difficult for businesses to be able to pull all those pieces together. So absolutely.
So Arman, We look at capabilities in other countries often and see what's available and what learnings we can have from them. So have you seen anything over the last, let's say, 5 years, or you can go back further if you'd like, 10 years, that you think we should be aware of and that folks should be aware of?
I think the one that's mostly talked about is the European example around strong customer authentication. And a lot of the conversation that is happening right now is there's an association with stronger customer authentication with the fact that you're going to be challenged for your transaction, which is not the case. And I think for me, a very important message to give is strong customer authentication doesn't necessarily mean friction, and doesn't necessarily mean that you will have to do something to enable the transaction. It goes back to that bartering of information and having sufficient confidence being exchanged between the merchant and the issuer in order to have the confidence on the legitimacy of the transaction. If some is missing and there's a doubt, or there's something unusual, or there's something that is high value, then it is actually quite good to have that. And US Payment Forum also made a comment on how having this kind of technologies really helps reduce online fraud, and it's proven to work also in Europe. So it's one of those where reducing fraud doesn't necessarily mean having to do something painful for the customer, right. But there are technologies made available, and there's a lot of evolution that happened, and that makes this possible, and we see it being adopted more and more in different areas. With regards to that, I think it's the fastest evolving specification that we have. It's the only one that has 4 digits because we go so quickly through the iterations that soon it's going to be Amazon. It's updated every 7 seconds.
Well, I don't know. Sometimes I have to put 8 digits in, and I can't remember all 8. So I'm worried it's not going to work for me.
But it says that it works, and it's moving relatively fast, and the updates are being added as we go. And a lot is education of the customer was mentioned. Education of the vendors is also something that we focus on, because a lot of the people that are implementing those solutions don't necessarily know that these functionalities and these conveniences exist, and they're not being leveraged. So some merchants say, oh, okay, this is my customer, I know them. Why don't you challenge them? And we realize that they rely on a payment processor that is actually taking care of the fraud for them, and they're not seeing the fraudulent transaction. So having a better understanding or authentication of the consumer will help reduce the complexity throughout the chain, and having that understanding on how this is happening and having a better authenticated customer at the very beginning really helps everything from the end to end.
So Kim, as we look forward, and there's new technologies coming out all the time, right, and being made available, what should folks consider and think about before deciding to implement, or considering which one to implement, right? There's so many options. What should people think about when they're doing that?
I think the most important thing is to understand that there is never going to be a perfect form of authentication, and there's not going to be one that works for every customer. So multi-layered approaches are still critical. And being able to have authentication options. I think that a lot of the FIDO examples that we've been hearing about this week have been amazing. Passkeys, I think, have a really great place for authentication. But there's also passive things like behavioral biometrics that are going to be important, and things that we haven't even thought about. But more important to me is making sure that there is a multi-layered approach to how we're going to address it. And then now we have to pay attention to both the payor and the payee. As more person-to-person, peer-to-peer types of payments are occurring. And we're very good at being able to know that Kim sent something from her bank, but who she's sending it to, it's so foreign to us still. So we're just trying to make sure that our customers are looking at both sides of the transaction where they can, or the financial institutions or retailers are working together in that process so that they can try to help address more, help prevent fraud, I guess, more effectively.
Yeah, absolutely. So we're running out of time, and I want to leave time for questions. But before we do, I will ask everybody, if you had one parting thought for folks in the room or who are listening to us virtually, what would that be?
Is it to me?
You only get one.
I would say that the trend and almost the need for the payment industry to not only collaborate and innovate, but also contribute toward the emerging standards in this industry would be like key contributors in an effective strategy as we look forward.
I guess, I don't know. I mean, for me, I guess it's really, again, keep the consumer in mind. I think we often put a lot of emphasis on the device or the payment instrument, and people don't really understand the dangers that they're running into when they're trying to use their payment method.
Right.
And so, I think this is finally the right time to focus on consumer education and helping them to understand that friction's not always a bad situation. And helping them also to understand that when things are happening without friction, that there are really strong authentication methods that are happening passively as well, and they just might not understand that component.
Yeah, excellent point.
And if I can leave you with one thing, is authenticate or not authenticate is not the question. So we saw regulated and regulated, and trusted and trusted. Authenticated from the merchant, the acquirer, the issuer to the cardholder. As long as he's authenticated, I think it's improvement. And any feedback from the industry on what we can do in order to move forward the specification to enable those specific use cases and bring that trusted transaction is always welcome.
Yeah, excellent point. Well, thank you, everyone. Do we have any questions?
Thank you, Stacy.
Stacy, why don't I give you, these are the questions in here.
Okay.
So I've turned off my notifications so you don't get barraged by everything. And this is in there, so you can go through them.
Okay. Thanks. Oh, it's little. Okay, let's see. Okay, the first question. Can you talk about whether Apple Pay and Google Pay have meaningfully lowered fraud and or chargeback claims?
Well, first I would step back and just say that adoption of digital wallets is actually increasing, which is great. Mm-hmm. And so now people see that there is convenience and security built into digital wallets, and we're going to see more and more adoption of digital wallets in general. I can't speak specifically to Apple and Google Pay, but I just first would just think about it from a digital wallet standpoint.
Armand, this one's for you. Do you foresee passkey as a potential preferred or recommended technology to support soon-to-come CNP authentication frameworks?
So it's a good question. I think there's a lot of different ways to implement passkeys. And I think we've seen quite a lot of clarification happening these last 2 days that really differentiated between the consumer use case and the financial or regulated use cases. So if done right, there's probably a role to play. Yeah. And today, I mean, we already see FIDO authenticators being used for payment authentication. So that's an easy answer.
Great. Okay, the next one. Authorized push payment fraud is growing fast via scammers. The sender could use information about the sender's account behavior before sending funds. Any progress on helping the sender make a risk assessment?
Any progress to what, sorry?
With the sender making a risk assessment.
The sender making a risk assessment.
Yeah.
So
not so much.
Yeah.
not so much.
Not
I'm
so much,
assuming the question is meaning if you have a suspicion that where the funds are going is a mule account, for example, is there a way to notify the sender?
I mean, I think there's a lot more going around a mule account notification and sharing of known frauds. That's improving. We're seeing a lot of more desire to be able to share that information. But I mean, the biggest challenge with any of those types of payments is that you can't pull it back, right? And so we've been so accustomed to being able to stop payment on things or to reverse a payment. And that world does not exist anymore with faster payments and peer-to-peer payment models push payments.
Yeah.
So I don't think so.
Yeah, and I think there is also, I'm pretty sure whenever we do peer-to-peer payment or individual-to-individual payment, there's a lot of responsibility that sits with the person sending the money also, because again, it's totally based on trust. So I think a lot of onus is put on the user itself instead of like a financial institute taking on the liability of that transaction.
So for card not present fraud, other than 3D Secure, what other mechanisms do you recommend? And can dynamic CVV2 make it safer?
From the EMVCO side, we only provide different technologies made available. So the one that we make available for authentication is 3DS. So I can't talk about the other types of implementations.
And the last question, do you see fallback activity volume declining or increasing in the near future?
Fallback?
That's what it says.
Again,
Assuming that was a typo.
Are they in the room? I don't know what
Is
that
the
is.
person in the room?
Yeah, the question, just regarding, right, if it's a fallback, meaning a chip transaction that's, there's an issue at the terminal, the customer can fall back to a swipe transaction.
Oh, okay.
So now repeat the question one more time.
So do you see fallback activity volume declining or increasing in the near future?
That's an interesting question.
I hope declining.
Yeah,
Yeah.
I hope so.
I don't know.
Yeah.
We don't know.
I believe it's declining because you see more and more chip cards being adopted. So we're getting really close, between 90% and 100% in terms of, the only thing I can talk about is the number of chip-based transactions is constantly increasing and is really getting close to the really high 90s. And this is the kind of data points that I can provide for that.
Sure.
Okay, so let's give a hand for our panel. Thank you so much.
Thank you, everyone.
Super interesting.